whilst there are new specifics, and a lot of academics have talked about the demise of the dollar for a long, long time, including over most of my near 40-year adult career in finance. It never happens, and there are a lot of important details why, but at the core, ultimately, the world's currency market should reflect the biggest economies in the world. And if it doesn't, you end up with the kind of complex cycles that we've seen so much the past 30 years, where the rest of the world is essentially dependent on the choices of the US central bank, the Federal Reserve. And when they're raising interest rates sharply, what it means is, because the dollar is so dependent, all these other currencies go down in value against the dollar. Their imports go up in local currency terms. They have to raise interest rates, even though it might not be justified domestically, etc., etc. And then when the Fed's cutting interest rates, the opposite happens. And so it means for other economies that aren't on the same cycle as the United States, they're constantly subject to the whims of the US central bank, which I quickly add has a domestic mandate. And it's a sort of very unsatisfactory state of affairs from a truly global perspective. We need to have, as I know, a number of key Chinese thinkers have thought 30 years, a more complex system where more currencies might be part of some kind of basket that plays some kind of broader role, but it's not easy to achieve.
Well, China, one of those countries, of course, pushing its own currency as an alternative to the dollar. We've also seen the first LNG trade in yuan. Are we already on the way to de-dollarization?
I mean, these are tiny, tiny steps. You know, I've been following this stuff for a long, long time, and if you go back to the days of when people thought Japan was going to take over the world, and you'd see people starting to buy Japanese yen for the first time in central banks, many of these anecdotes would be offered as to why the yen was going to take over. And of course, even more so when the euro was first introduced. And in that context, it was partly done by big European countries, the French in particular, who consciously didn't like the dominance of the dollar. But whilst the euro is now 20% of FX reserves, as you said, it's not really taken over at all, the kind of dominant role that the dollar has. So it might be, and you know, given China's ongoing growth, and at some point, it's probably the case China will become bigger than the US. And in this regard, I note in purchasing power parity terms, I've just seen data that said in 2022, the BRICS collectively became bigger than the G7. If that carries on, at some unknown point in the future, it is inevitable, but I'm not sure it's going to be next week, because you need a lot of, going back to what I touched on earlier, you need a lot of these countries, China included, to really, really want to encourage foreign investors to be able to freely invest in and out of the RMB, for example. And as I'm sure you're more than aware, the Chinese authorities currently have very significant restrictions on what their own citizens can do with the RMB, never mind people elsewhere. So that's one of the bits. But as you see the BRICS countries getting closer, particularly in, let's call it, more geopolitical terms, or some of them, rather than economic, we probably will see more of these kind of developments that you cited. But, you know, it's very early days, I would say.